Welcome to Mortgage Masterminds. I'm Richard Greaser, VP of Marketing at Sales Boomerang and Mortgage Coach. And my guest is Steve Winokur, CMO at Angel Oak Lending. Steve, thanks for joining today.
Thanks for having me, Richard.
So I'm going to start by just telling a little quick story from a loan officer for one of the companies that use us. You know, in this market, I think it's super relevant. I thought this was really powerful. So this loan officer got a mortgage inquiry alert from Sales Boomerang, and the alert is essentially telling this loan officer that one of the borrowers that they worked with before is cheating on them and went with another lender. And that loan officer, it was a first-time home purchase that this loan officer 1 year ago, back in 2021, was working with the borrower, and the borrower had fallen out because it was too competitive. He couldn't buy a home, and the borrower had given up and stopped searching. And the mortgage inquiry suddenly came in now in 2022 in the summer, right? In a totally different market environment. And so the loan officer picked up the phone and just called the borrower and said, "Hey, what's going on? How are you doing?" He didn't even really ask anything about, this alert intelligence, just checking in. And the borrower said, "Hey, I totally forgot about you. It's been like a year since we had talked," and they got back into discussing. And it turned out that now that he was interested in getting back into the home buying search because he thought that that he could have a better chance of getting one of the homes that he wanted. And so what the loan officer did was actually what ended up happening. I'll just cut to the chase. Is the loan officer actually ended up getting the mortgage with that borrower, but the borrower, to do that, the borrower had concerns about this high interest rate environment and whether he should even be doing a mortgage and buying a home right now. And what was really cool is the loan officer used Mortgage Coach and was showing a rent versus buy analysis. And in that rent versus buy analysis, he showed that the current interest rates are around, between 5 and 6% to purchase the home. But he showed the cost of waiting and the rent, with his current rent payment. I believe his rent payment was like $2,300 a month. And the mortgage would have been like $2,600 a month. But if you looked at it over a year, 5 years, 15 years, and 30 years, and you figured in the tax benefit and everything, it was so much in favor for that borrower to buy the home, regardless of the interest rate. And it was just a beautiful story that I wanted to share right here. Steve, you ever hear anything like that when you talk to some of your loan officers?
Yeah, I think that cost of waiting analysis is phenomenal. Because I think people, like in our non-QM space, sometimes we have people who talk about waiting maybe until their credit score gets a little bit better. And so they'll think about putting off buying a house for a year until they can work on their credit score. And then when you start looking at the cost of waiting that year, you lose the equity, you lose the appreciation, you lose all these things. I think the Mortgage Coach does a great job of really highlighting that to the loan officer to demonstrate to the borrower the benefits of buying right now.
Totally. Yeah, so that was on my mind. That's why I brought it up. And let's jump into this. We've got a fun podcast here. I think we're gonna get a little bit into your background and what you're doing at Angel Oak. Why don't we start there? Why don't you tell us a little bit about your background, Steve? You've been in this business for a little while, so and you've got an interesting background about how you ended up at Angel Oak. So why don't you give us the Reader's Digest?
Thank you. Yeah, thanks for having me, Richard. So I started my career sort of as a freelancer and then started my own marketing business back in the early 2000s. Went from just kind of a marketing communications firm to a branding firm. And then the financial crisis hit. And, my partner and I at that time found that a lot of companies weren't focused as much on strategy from a marketing perspective. They were like, we need business. So they were coming to us like, we don't want to do any analysis. We don't want to build on our brand. We just need a new website, or we just need a direct mail campaign. And that really wasn't kind of our focus. And so I ended up taking a role in a bigger ad agency, shifted over to the client side soon after that. And that's how I got into the mortgage business or the kind of real estate space. I got in with an MI company, worked with a couple different roles over area 6 years, and then ended up at Angel Oak about 6 years ago.
Well, very cool. So, I mean, Angel Oak's interesting in that for you in your role. I talk to a lot of chief marketing officers, VPs of marketing, chief lending officers, VP of lending, and the reason it's interesting is you kind of have two marketing plans, right? One's for wholesale with brokers, and one's for retail with loan officers. And and do you want to just talk a little bit about the difference in those marketing plans and how you craft those?
Yeah, I mean, I think it is interesting from the fact that we have two different channels, and on the retail side, we also have we have the distributed retail and consumer direct. So even that sort of has its own differences as well. But wholesale and retail, you're looking at B2B versus B2C. So the plan's different, the kind of marketing's different, but this kind of the common thread that runs through both of them is education. Our Angel Oak, our kind of main niche is non-QM. And so whether we're talking to other loan officers in the the wholesale channel, realtors or borrowers in the retail channel, it's all about educating them about that these programs exist. A lot of self-employed borrowers don't know there's options for them besides using tax returns. So even loan officers don't know. They might be talking to a self-employed borrower, talking about tax returns. They don't typically self-employed borrowers' tax returns don't show a lot of income because they write everything off. So if a loan officer doesn't know these programs exist, they can't offer Angel Oak programs. And the same thing applies in the realtor space and the borrower space. So kind of all the tactics that we do, regardless of the channel, are all around education.
Yeah, one of the things you said to me was a statement that you were just so against. Realtors are out there telling borrowers, "Hey, go file tax returns for 2 years." Are you kidding me? Like you're like, don't say that. Do not say that. They don't need to do that. And so for everybody who doesn't know what non-QM is, these are folks who are using a lot of times bank statements, right? I think 2/3 you mentioned of your business comes from that kind of that business, and so you're trying to combat that mind frame that realtors have. That's where they are. They're just ignorant, honestly, and they need to be educated that there is options for these a lot of self-employed people. All of these folks, there are great options for them. So you want to talk a little bit more about that?
Yeah, so I've heard from a couple of our account executives, and it always cracks me up when they've been to realtor events where they hear from realtors who are like, "Oh, I can't help you right now. You have to go file your tax returns. Don't write anything off. Just take the minimum tax deductions for 2 years, so you have 2 years of tax returns to show income, and then come back to me and we can help you buy a house." Like, no. That, like you just said, that's a horrible financial advice. We use, because of Dodd-Frank, they listed certain documentation types, and tax returns being the main one, that you use to calculate their ability to repay. Well, we look outside that, and we'll use bank statements to qualify them for income. So, like I said, banks, self-employed borrowers typically don't have great looking tax returns because of tax write-outs, but you can see their true financial situation using bank statements. So that's roughly every non-QM lender I've talked to. That's usually about 2/3 of their business is self-employed borrowers. And so the self-employed borrowers can take advantage of the tax code, write everything off, and still purchase a home.
How prolific is that mindset? I mean, when you're out there educating realtors, right? Like the average realtor, are we talking 50% are telling borrowers like go file tax returns for 2 years? Is it like 50% of realtors out there, or is it like is it a different percentage? Like what is that level of ignorance is what I'm asking.
That's a great, I don't know if I have a firm grasp of that. I think that the ones that sort of out of hand turn them down and tell them that is probably fairly low. I think what ends up happening is if they don't know, they'll either just be like, "I can't help you," or they'll be like, "Well, let's talk to my lender partner." And that's really what I think that's what our education is about, is letting them know these programs exist. And then don't say no to somebody out of hand. Don't give financial advice. Don't tell them you can't help them. Simply call your lender partner and ask them and present the situation to them and see if they have an option for them. And so that's kind of how we market that. Like, go to don't say, if you're a realtor, don't say no. Just bring the deal to an Angel Oak loan officer, present the situation. We'll see if we can help. And we do that same thing on the wholesale side with other loan officers is, don't, if you're not sure about a deal, don't just say no. Call your local account executive, present the deal, present the scenario to them, and we'll see if we can structure a deal that can get the borrower to the home.
Yep, makes total sense. So we were talking a little bit earlier. You got a lot of folks in similar roles that you have, and other folks too in sales positions who are interested in this. What is working for you in terms of like where are you having success getting business from in this market right now? And I know you're doing a lot with your loan officers and realtors. So if you can, maybe touch on that too. I think a lot of folks would love to hear.
Yeah, I think it's interesting because now that our non-QM volumes have dropped a little bit from the spring, but not nearly as much as the overall marketplace. And so I think, what we've seen over the last, I've been in with Angel Oak 6 years, so I've seen different cycles. But what we've noticed is when there's a big refi boom, loan officers aren't as interested in non-QM. I think in the last couple of years, what we noticed was with all the refis that loan officers had, they would tell it, well, they have a stack of 10 rate and term cash out refis sitting on their desk. I don't want to bother with a bank statement deal. And it's like it's almost like I have too much business. I don't need non-QM. And then what we find is when those refis start to dip a little bit, the loan officers are like, okay, last couple quarter I did 20 loans. I got 5 in my pipeline. I got to find something to supplement that. And that's when they pay a little bit more attention to non-QM. So while the general market's dropped considerably, we haven't seen as big of a drop in the non-QM space because I think loan officers are really looking at different ways to fill up their pipeline with different products, and non-QM is a great option for them.
No, I was just curious, are you seeing that in general, do non-QM offers, are they less competitive or more competitive or the same as, the traditional conforming, conventional FHA, whatever loan type? Are they, is there a difference in terms of how competitive the offer is just in general?
What do you mean in terms of interest rate? They're usually about a point to a point and a half higher. But what we've seen in the non-QM space is you don't really have, a lot of these borrowers don't have other options. So we've talked to loan officers and they're like, I don't know if I can, now the rates are 7.5%, 7%. So the one objection that we kind of hear from loan officers is I can't sell a rate of 7%. And we tell them, it's like, listen, you can, because the person that you're talking to understands that they don't have another option and they're saving more money on their taxes. They're usually financial savvy. So they understand, hey, I'm saving all this money because I'm writing things off. I'm okay with paying a little bit higher interest rate so I can get into a home. And so I talked to one of our AEs. She's like, she never gets a price objection from a borrower, right? Because like I said, they get it. Even though the rate is a little higher, they get that it's not like you can go to a conventional loan. And if you wanted to go conventional, you have to run that cost of living analysis that Mortgage Code has. And you'd say, okay, we can wait 2 years. I can file taxes with no tax write-offs for 2 years. So you combine that increase in taxes with the cost of waiting, which Mortgage Coach would show, and you're like, that's not a financial decision.
For sure. Yeah, absolutely. I mean, thank you for that plug. I'll take it all day. You said it better than I could say it myself. But so let's focus a little bit on the realtors and how you're getting your loan officers to work with realtors and to kind of work together with them to target, self-employed borrowers. How do you do that?
So we have plans on both channels. So wholesale channel, what we do is we'll send an account executive out with a loan officer. So if a loan officer with ABC Mortgage has a relationship with a Keller Williams office or another realtor office, they can go in and present, and we'll send an account executive to go along with them as a product expert. So you as a loan officer with ABC Mortgage doesn't need to be a non-QM expert, right? You'll bring Scott along, and Scott will get up and be like, "Hi, I'm a representative of ABC Mortgage. I'm here to help just talk to you about non-QM programs." They don't hand out angel oak business cards. They're sort of the silent partner in the room. But and then on the retail side, the angel oak loan officer will go out and talk to realtors. To me, the real benefit of speaking to realtors is that they don't know these, since they don't know these programs exist. You're just going up presenting information. So the typical loan officer probably will go out to a realtor event and say, "Hey, I'm with ABC Mortgage. We have great rates, great service, and we'll close your loan quickly." Right? And that's the typical story that I hear from loan officers that come on like, "Oh, we great rates, and nobody beats us in service, and we get your loan closed really fast." That's the typical story. And so when you can go out with non-QM, you can go out with a unique story that no one else is talking about. Another thing that we found is one thing that realtors, a lot of them are 1099 employees. So personally, they're a perfect candidate for our bank statement program. So that's one. And then the other thing is a lot of realtors are property investors, and they're a perfect candidate for our investor cash flow program. So I talked to our account executives, and they're like, every time they go out, they speak to 20 realtors with a loan officer, because the loan officer gets at least one deal from a realtor in the room. And that's not even referrals, right? That's strictly just, a referral from themselves.
Amazing. Between the realtor for the business, for the realtor themselves, from their investment properties, and then from the folks, the borrowers that they can refer, that's a hell of a marketing plan right there. Yeah, that's very cool.
And then, like I said, it's really both channels have the ability to build relationships with realtors, or at least help build a relationship with a realtor. And we really look at them as the gatekeeper to a lot of this, right? They're the first ones that a borrower often will reach, or a home buyer will often reach out to. So the last thing we want is that realtor saying, "Richard, I'm sorry, you will not qualify. Come back in 2 years," or I can't help you, or showing you houses that maybe are smaller than you can afford, or maybe too expensive houses. Like, we want that to understand, what you can qualify for, and that you possibly could qualify, so you don't turn anybody away before they even get into the process.
That's totally. Okay, so in our conversation leading up to this podcast, we had talked about getting back to basics, and a lot of folks are talking about that, right? Refi business is dried up. Got to get back to kind of the traditional blocking and tackling. What does that mean to you? I've heard it described by a lot of different folks, and a lot of times it has a very different meaning. And what does it mean to you for your loan officers, and what does it mean to you for how you support them, right?
Yeah, a lot of it, I think, is just getting back to the realtor presentation, going out and networking, going out and doing some things where it's not necessarily a direct lead source, but you're going out and building relationships. I think over the last couple of years, and I kind of joke, like, if you were a loan officer and didn't have a good year last year, I'm not sure what you were doing. I think a lot of loan officers got business, got a lot of refi business, got a lot of things. Maybe not how to do some of those things they had done in the past to make them successful. And so we kind of look at this back to basics, and just kind of getting back to how you grew your business in the first place, right? You're out networking, you're meeting realtors, you're going to realtor offices, just kind of hitting the pavement and getting out in front of them to continue building those relationships, be the advisor that a borrower needs, or realtor needs. Present yourself as just hey, if you have any questions, feel free to call me. If you have scenarios, call me. Like, just real down to earth, kind of like blocking and tackling. That's really what it's about now. I don't think you're not just getting people calling you willy nilly out of the blue like you perhaps were, back a year ago. And so now always got to work a little harder. And I think going back to basics is a great way to do that.
Yeah, you said it best. I mean, if you weren't killing it last year, this might not be the industry for you as a loan officer, right?
Yeah.
I don't think I've ever seen in another industry anything ever like it, like where literally people are saying they have so much business that they have to turn it away. I don't think I've ever seen that before.
Yeah, no, and I mean, it's a tough thing to imagine because you're right. I don't think I've seen that in another industry where someone's like, I am so slammed that I'm not as interested in picking up another piece of business. I mean, that is a kind of a strange thing.
Well, so when you were talking at your company last year, I mean, amongst the team, how were you cognizant that this wasn't going to last forever, and you needed to create like a war chest or something for when times get a little tougher? Or did you guys have those conversations?
Not, I mean, like, I think what we've seen non-QM is sort of had a steady increase. So I think we kind of felt like even last year when the refi boom was going on, when I talked about a lot of loan officers weren't paying attention, they still were. Like, I don't want to make that sound like we're struggling or nobody was paying attention to us. I think the forward-thinking loan officers that sort of knew, okay, like you just said, this refi boom is going to end. And so I don't want to turn away. I want to help my referral partners. I want to get those loans, and I want to build up expertise. And so a lot of loan officers were doing non-QM. And so to me, when I talk about them, as they got into it and did help borrowers, I think I mentioned it to you, self-employed borrowers. Who do they know a lot of is other self-employed borrower people, right? So from a great referral source, if you're able to get somebody into a home, they know other people that are struggling to buy homes because they're self-employed too. So you just created a great referral source for yourself. And I think the forward-thinking, successful loan officers get that. The other thing is, if a realtor came to you last year with a bank statement deal or a self-employed borrower, and you were like, you know what, I'm too busy to take that out right now, that referral partner went down the street to somebody who would do that deal. And so now you just potentially lost a referral partner because you were too busy doing refis, right? And that's just not a smart long-term decision. So I really think the smart folks really got into it last year and now building up an expertise in it. So now when other people are getting in, they're working on their 10th or 15th bank statement while someone's working on their first.
Yeah, totally. You've got the practice. The reason I love this podcast is you're showing opportunity that's very steady in this market with the non-QM business. And it's really awesome for any loan officer who's listening or broker who's listening to this podcast to understand that there are growth opportunities in this current market right now that are very strong. Non-QM is one of them, right? That's a tool you can put in your toolkit. Another one is reverse mortgages. There's a huge amount of folks that are retiring right now that don't have enough money, the most in history, right? They need help.
Right.
And reverse mortgages is a great one to do that. I think if you just think about it, there are still some really awesome opportunities that you can help kind of keep your business propped up right now by just diversifying. And I think it's a smart loan officer that pivots and learns is continually adapting to the given market that they're in. You know what I mean? Like right now, non-QMs, I mean, if I was in the business right now, there's no way I wouldn't be doing that right now. It makes perfect sense.
Right. Well, without a doubt, and we keep talking about the other aspect is the audience of people that need non-QM is only going up, right? There's more self-employed borrowers than ever. There's more gig workers. Like, these borrowers aren't going away, right? Property investors, there's more and more people getting into property investing. So your target market is not shrinking. Right? So it's only more and more people are going to need non-QM as the years go on. And so we talk about you have to be self-employed for 2 years to use the bank statement program. So anybody who started in spring of 2020 is now being able to qualify for a bank statement deal. So if you think about what happened in spring of 2020, that was when it all hit the fan because of COVID. So soon after that, more and more people, they got laid off, they started going out on their own. So those people now are coming up to 2 years, or maybe they were at 22 months or 21 months, right? So they're getting closer. So the number of people we feel that are going to need or could qualify for a bank statement loan and need that program is only going to start skyrocketing as those people click into 2 years from when they started their own business.
So, I mean, with what you talked about with working with realtors, I would double down on that strategy. I mean, first of all, with the non-QM business and all of the different opportunities from the realtor, their investment properties, and the people they refer, that's just awesome. But you could also take it one step further. And I think what some really smart folks that use Sales Boomerang do is they'll work with their realtors. The loan officers will work with their realtor partners and they'll say, hey, I'll take the folks that you've talked to or sold a home to before, right? Help sell a home before or buy a home before. I'll take all those people and I'll let you know when you should reach out to them, right? And you have to be compliant about it, but all you have to do is just tell the realtor, hey, now's a good time for you to call this person that you did a home with before. That's all you have to tell them. It's a conversation. They pick up the phone, they call them, and guess what? The loan officer can know that, hey, that person just listed a home. Right? So the realtor doesn't know that one of the people that they helped sell a home for is just listed their home for sale. That's an amazing conversation to have for a realtor to maybe get the next purchase, right? That they might buy.
No.
And now you're giving more value back to the realtor, right, than you're asking for in terms of like opportunities. So I would 100% be doubling down on all the different ways that I could add value to realtors. And I think Sales Boomerang's an awesome way to do that.
Mm-hmm. Yeah, without a doubt. I think we talked about with the example before with that borrower who forgot about the loan officer. It's like it's easy to, when you're in the middle of stuff to forget about the realtor that you work with because people don't buy homes every other month, right? So it might have been 3 years since they dealt with that realtor. And they might have had a great experience. They're focused on something different. They get a call from that realtor, and they're like, "Oh, I loved Richard. I had a great experience with him. Yes, Richard, we'd love to have you help us buy our new house, right?" And I think you said it clearly too, because I've talked to our account executives and loan officers. Like a lot of times, you don't want to call them and be like, "Oh, I saw you just had a trigger lead," or "I think you just had your credit pulled," or like, but just calling up and be like, "Hey, this is Winokur with ABC Mortgage, right? I'm just following up, seeing how you're doing, checking in." And it's just a casual conversation. You don't have to tell them why you're calling. And I think it can be a little creepy when some of the data that gets out there. So you don't want them to, necessarily to feel like you've gotten a trigger lead or you've gotten something.
Last time we talked, you had just gotten married. Just want to know is the current home you're in and the mortgage you're in still working out for you? All I'm doing is a touch base call right now. And you can ask about questions that are going on in their life. You'll find out all of that stuff. The borrower will always share it. I hear these examples all the time with the intelligence that we give. And it's just a simple, hey, how you doing? That's all you got to do. And the rest comes.
And I think, like you said about providing value to the realtor, I mean, that to me gets back to the basics. If you're dealing with refinances, you're not dealing with realtors. You're just dealing with them straight with the borrower. There's no third parties involved. But with purchase, and we're obviously in a heavy purchase market, you need those realtors to help refer your business. And so I think it really gets back to kind of reigniting those relationships again. And that's really where, if I was a loan officer, my focus would be is finding those, going through my database. Okay, where did my purchase business come from? I got to reconnect with those realtors, figure out ways to provide them value so that they refer all their business to me. Instead of another lender partner.
Yeah, I think there's a lot of really just basic practices that every lender should be doing right now. If you're closing a loan right now, I think it's pretty clear that in the next, I would say 2 or 3 years, this is what most other folks are saying, rates are going to come back down, right? So all the loans you're closing right now that are over 5%, there's a chance that you're going to do a refi for those loans again in 2 or 3 years. That refi business will come back. Right? So you can plan for that. It's a cycle, right? So I guess what I'm saying is you just have to adapt to every given situation that you're in right now. And I think the situation that you're in right now is definitely to be focusing on things like reverse mortgage, non-QM, working with realtors, as much value as you can to give to the realtors, which is exactly what you're doing.
Right. Yeah. And there's, situations like renovation loans. I mean, I think from a loan officer, you want to have as many errors as you can get sort of in your bag of tricks, right? And so I think non-QM is a great one. Reverse is a good one. We did an event several years ago with a renovation company and a reverse mortgage company, and called it something like, I think it was called Get Rich on the Niche. And it was really about, as a loan officer, making sure you have all the programs that you can have to keep your business going. Because the last thing you want to do is, if you're sitting across from a good borrower that you're like, I know this person, good credit score, good reserves, good cash flow, good everything, you're like, but you don't have a program for them. Like, the last thing you want to do is turn away someone you have in your office who you don't have the right program. Likewise with a realtor, like, you don't want to tell your realtor partner, I can't help a good borrower, because what we've seen is, like I said, the realtor will go down the street and get the deal done somewhere else. Now that you just allowed your realtor to work with a new lender, which is that, you do not want your referral partners working with your competitors, because you don't know what's going to happen. They might have a great experience and decide to refer business to them instead of you.
Yeah, for sure. And with the type of intelligence that's out there from like companies like Sales Boomerang, I'm a little, I think I have my own interest here, but I think that you just if you lose a borrower these days to another lender, it's going to be very hard to get them back, right? Because people are getting information about when the next time that borrower needs a loan, and I from one of the statistics that I've seen before, there's about 11 mortgage transactions in the average borrower's lifetime. I've had 3 places bought and sold.
Right.
I've bought and sold 3 places. I've done a refi once. And I'm about 42 years old. I'm being generous. So, I mean, that's pretty normal. I think I probably will hit 11 transactions over my lifetime, right? And so you want to get in with me early on, because you're going to get all the rest of those transactions too, right? And that's what really helps you kind of survive in these cyclical environments, or, these different market situations where it's changing. So you can count on all of the business that coming back to you that you've worked so hard to get.
Yeah. No, and it does a great job of helping you too. I think it is hard, I think, for loan officers or realtors to stay in front of a previous customer for years, right? Like, it might be 3 or 4 years since you dealt with your realtor. That's a lot of emails, or a lot of, drip marketing you need to have over time. And so I think some do a good job, some don't do such a great job. And so I think a tool like Sales Boomerang really helps protect your database and protect your customer base, because, people don't always think about the last loan officer that they used, or the realtor they used. I mean, like I said, it might have been 3 or 4 years, but you might have had a great experience, just lost their business card, forgot their name. And like you said, when you're calling and be like, hey, the last time we were just getting married, it's like, oh yeah, I remember working with you. That was great. Yeah. Oh, I don't want to even think about calling you. I'd love to work with you again. And boom, there you go. You got your back with your customers. Really, I love those tools.
Steve, I could not have said that better myself. Thank you for that. I'll take it all day. Look, I think we've had a great podcast. I just want to say thanks so much for joining me on this. Did you have anything that you wanted to say? If there's a broker or a loan officer listening, any message you have as a closing?
I think the important thing is especially in today's market, is to educate yourself on what programs are out there, whether it's non-QM, whether it's reverse. Obviously, I'm biased towards non-QM, and from a loan officer perspective, reach out to your account executive, learn what's available to them, so you can help as many borrowers as possible. As a realtor, the same thing. Reach out to your angel opener partner, so you can understand what's available, so that you don't turn away borrowers as well. And now is not the market where you want to turn someone away that's well qualified, because, like you said, they'll go down the street and they'll find somebody who can help them. And I don't think you want those folks. You have them in your office. You've got them ready to buy. You want to close the deal, and so a tool like non-QM can help you do that.
Awesome. Well, thanks so much. I appreciate you being on the podcast, Steve. Can't wait to have you on again.
Thank you, Richard. I appreciate you having me.
Thanks for listening. If you like the podcast, please give us a 5-star rating, subscribe, and tell all your friends about the show. We at Sales Boomerang started this podcast to elevate the mortgage lending industry by sharing the kind of exclusive, insider knowledge from the successes and failures of the best of the best. The foundation of every successful lender is borrower retention. Sales Boomerang is the #1 fully automated borrower retention system in the industry. 1 in 2 of the biggest lending companies in the United States use Sales Boomerang to make sure they reach out to their borrowers when they need a loan, and more importantly, before their competitors do. If you want to learn more about Sales Boomerang, check us out at salesboomerang.com.